The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Squawk Europe. I'm Steve Sedgwick with Ben Boulos here in London. Karen Cho is live from Vivatech in Paris. And Charlotte Reid is live from the G7 summit in Evian. These are your headlines. More details on the U.S. Iran framework emerge, including a reported $300 billion investment fund for Iran and capacity to export oil again. Speaking at the G7, Mr. Trump insists the deal also guarantees Iran's nuclear disarmament.
A lot of good things are happening, and most importantly, Iran will not have a nuclear weapon. That was how I got involved in this. We can't let that happen.
And attention at the G7 turns to AI and security today, with an array of tech execs descending on Evian-les-Bains, while Europe continues to reckon with the fallout from the White House shock Anthropic ban.
The tech world flocks to France. AI access and strategic autonomy take centre stage here at Vivatech as Europe races to build domestic AI champions. We'll be speaking to a key conference insider, Publicis chairman Maurice Levy. He joins me on set at hour.
And the Fed countdown is on. The first decision under new chairman Kevin Warsh as debate swirls over the future of forward guidance at the central bank.
We've got a great show for you. Great guests, great news flow as well. So let's get straight into it. The U.S. Iran deal to end the month-long conflict will reportedly include a $300 billion fund to enable reconstruction of key Iranian infrastructure damaged in the war. This according to reports from Reuters, Bloomberg and the Wall Street Journal. The Memorandum of Understanding also reportedly sees Tehran commit to never having a nuclear weapon, with both sides agreeing to fully open the Strait of Hormuz. Iran will also be able to start selling oil once the deal is fully signed. Speaking at the G7 in France, President Trump said the Strait of Hormuz would be fully open by Friday.
The relationship has been outstanding. He's a man of great respect. Everybody respects him and they respect your country. And it's an honor to be with you. And we just signed a deal with Iran, and this country was a very powerful ally, and good things are happening. The ships are starting to move now. We're going to have it fully open by Friday. The ships are starting to move nicely. Oil is starting to go, and the prices are coming down rapidly. Stock market is going up rapidly. A lot of good things are happening, and most importantly, Iran will not have a nuclear weapon. That was how I got involved in this. We can't let that happen. So they will not have a nuclear weapon.
Charlotte, I've been watching your great coverage in the previous hour, and it's very interesting how still the shadow of the war with Iran is still hanging over this meeting. And of course, those key leaders from the UAE and Qatar also having bilats with the president.
Yes, absolutely. Looked at President Trump, wanted to get some support on this MOU that was signed over the weekend, and Iran kind of grabbing the headlines. And we know that, the other G7 leaders wanted to hear from President Trump on more details on this MOU, and, kind of a mix of cautious optimism, but also skepticism, because the message, was quite mixed throughout the day from what we heard from President Trump. The question of this potential billions of U.S. investment into Iran, saying this is a ridiculous rumor, despite these multiple reports that you were quoting a little bit earlier. They said that the U.S. has the right to do so if they want. The question of the Strait of Hormuz, President Trump said the strait will remain toll-free beyond the 60-day window of the MOU, kind of contradicting what we heard from other U.S. officials previously. So, not so much of the clarity that maybe some of the leaders were hoping for. The question of sanctions relief as well is still hanging on the front. And there's, more and more the feeling of the concessions that Tehran would have to make are not enough, and potentially that this deal, the terms of this deal, are less strong than the terms of the deal that was signed back in 2015 under President Obama. And this concern is kind of growing amongst Republicans themselves, and we hear from Republicans both in Senate and in the Congress that they want to see the details and review this potential peace deal and be able to agree on it because of a lot of these details have not been made public just yet. So we have to wait and see there. But what we know from the connection between the Iran war and the Ukraine war, because of course at the G7 President Macron was also very, very keen to keep a lot of the attention on Ukraine, and President Zelensky himself attending the very first session of the G7. Here again, a potential cautious optimism on that front. We know that up until now, President Trump has been kind of playing a more neutral role rather than an ally between the Ukraine and Russia. And what we hear from the communique that was published yesterday is that they stand united in their unwavering support of Ukraine, including new extra sanctions on the energy and oil sector of Russia. And they say particularly because the Strait of Hormuz is potentially reopening, then a lot of sanctions have been removed on some seaborne Russian oil doesn't need to be there anymore. So it is the moment potentially to put these extra sanctions on Russia. So we have to wait and see whether this happens. But it was interesting to see the connection between these two aspects. And today, as we were saying earlier, the attention switching to tech and AI for the next day, guys.
Charlotte, thank you very much indeed for that. Well, let us move on, because the EU and US have discussed creating a trusted partner scheme for new AI models, according to the Financial Times and Reuters. It comes after the US Commerce Department revoked access to Anthropic's latest model to non-US citizens on Friday. Tech will take centre stage at the G7 today, with OpenAI's Sam Altman, Anthropic's Dario Amodei, Mistral's Arthur Mensch, and Mark Benioff at Salesforce set to attend. But our next guest says AI can't scale without modern, digitised, intelligent energy systems. Olivier Blum is the CEO of Schneider Electric, and I'm delighted to welcome him around the set. Olivier, always great to see you, and we always have such great conversations. You are picks and shovels for AI. Without Schneider, without the companies like yourselves, we cannot have this enormous data centre build-out and build-out of capacity as well. Are you concerned about the pace of development at the moment and what it means for your company?
Well, definitely we see a huge acceleration year on year. When you look at a company like Schneider and many others, I think we are just at the beginning of our own journey when it's about consuming AI. I'm not yet concerned if we're able really to plan properly, to anticipate, to have strategic discussion with all the players in the market. I think we can follow the demand, but definitely there is a huge acceleration in the past 12 months.
When I say concerns, I'm sure you know where I'm coming from. It's because I see, personally, my view, not CNBC's, bubble-like valuations in large amounts of this market. I see investors buying into hope rather than reality. I see SpaceX absorbing a lot of money, talking about fantastical schemes about data centers in space, which may or may not come to fruition. But when I look at those valuations, it worries me that there will be a bubble bursting, and it will drag everyone down and drag the whole movement to greater AI adoption down.
I always like to go back to the consumer, the people who are consuming AI. When you look at what all of us are consuming, it's peanuts compared to what it would be in the future. And again, going back to what we do at Schneider, I think we consume less than 5% of what we will consume in terms of AI in the next 5 years. Not only for what we will consume inside Schneider, but how we will amplify every single electrical product in the world to help you to save energy in your home, in the building, in the data center. So you are right, we are all concerned sometimes on all those valuations, but I like to go back to the customer, the people who are consuming, and I believe we are still at the beginning of the journey, and definitely you need to build that compute to support all this AI consumption in the future.
Schneider has been on a long-term upward trajectory in the shares, there's no doubt about it, long before people talked about you as an AI facilitator with all the energy solutions that you provide as well. But your systems division, including data centers, is your fastest growing, I believe, as well.
Yep.
Are you worried, and I've asked you about this before, but I'm just reiterating the question, about the concentration of risk in that very fast-growing sector compared to the other areas that you work so much on?
Yeah, look, you know very well, Schneider, we are always concerned because we like to have a balanced exposure, but data center represent to about 25% of our business overall. We keep growing very fast in other segments like semicon, power grid, industry, so we are mitigating that. We are very balanced from a geographical standpoint. We are also very balanced from a business standpoint.
Are you balanced though? Because when I look at where your growth is, and I look, and correct me if I'm wrong on these figures, but your AI manufacturing systems growth in the United States is somewhere in the region of $700 million by 2027. In Europe, it's only 110 million. Sorry, maybe I've asked the wrong question. Maybe the question is Europe underbalanced compared with the rest of the world in AI adoption?
Well, look, definitely. It's not about Schneider. I would say you can see it in the market. Nevertheless, you have seen in the past weeks, even in the past 12 months, that Europe has started to move, in particular France. As you know, we were in 2 weeks ago at Choose France, where we've announced with SoftBank a major project that will go first at 3 gigawatt, then 5 gigawatt. So it shows that France is moving. Keep in mind that France had only 1.5 gigawatt installed by the end of 25. And only this deal is 3 gigawatt, and we see many more coming. You know, there is Vivatech this week. So I think Europe has started to catch up, but of course we need more.
Are you going to Vivatech?
No, I'm not going to.
Oh, well then someone who's there will tell you all about it. Karen.
Good morning from Vivatech, Olivier. I wanted to ask you a little bit more about tech sovereignty, because the counterweight to Steve's question about bubble-like valuations could be this digital sovereignty story, that if countries, nations across the world figure out that they need to have more local tech, it could again power some of the moves we've seen in AI thanks to fiscal policies. Would you agree with that?
Well, we need to live in a world which is extremely balanced. That's important for company, and for the people in the planet, that you have a good balance between the different blocks in the world. And then definitely back to the question of Steve before, it's important to have a Europe which is stronger on the digital side and building its own sovereignty. So we like to participate in Europe, in US, in China, in India, but it's great to see that Europe is catching up on the digital front.
But Olivia, the policy has to be friendly. We know money goes where policy is friendly. And the points that have been raised around the tech sovereignty story is, look, you don't have enough alluring fiscal policies here. What's getting funded is purely just civilian defense dual use. And number one, if you want a carrot approach, then you need to have a more friendly fiscal policy. And number two, that again, we've got more regulation here that is stopping the AI development story. What are you seeing on those two fronts?
You know, I've been living in a world where there is always policy regulation. I mean, when you look at what happened in France 2 weeks ago, what has been announced, for instance, with SoftBank again, that's a very good example that where in a couple of months you can have an alignment between a government, between EDF, which is providing clean electricity, Schneider Electric, a large investor, and we are going to build all together a data center of 3 gigawatt and going up to 5 gigawatt. Whatever are the policies, it shows that you can make it happen when you put all stakeholders around the table. What happened at the European level, if it can facilitate, if it can encourage, it's even better. But I think we can still go through within the existing policies.
Olivia, if I can bring it back into the studio as well, I just wonder, with the rapid developments in this area, we know that Elon Musk's SpaceX has this ambition of data centers in space, potentially with their own energy supply. How are you positioning with an eye on the future, given that the data center build out on Earth that you're involved in obviously requires huge upfront investment? Is there a danger that maybe the space data centers steal a march and then you find that you've got these data centers that are obsolete?
Well, look, whenever there are new development, we look at them. I don't think it's going to impact anything in the near term, in the next 5 years or even more. But we look when they are a bit more advanced, when SpaceX will be more advanced, we look definitely at those opportunities. But I would say that's not the major concern that we have in front of us for the next 5 years. We have not even built the AI data center that you need to support AI. We are just at the beginning of the journey, We believe that 60 to 70% of data center in the next 5 years will be for AI. The next wave will be in space. Nobody knows, but I can tell you we have not even started to build what AI needs on Earth.
And then in terms of where the money ultimately comes from to pay for these data centers and for you to get a return on that investment, it ultimately requires the AI platforms to turn a profit in order to keep paying for the data centers. How much concern do you have about the increasing way they are turning to debt as well, and funding their own their own progress and build outs with that, and how sustainable that is when companies start to realize actually the tokens to use AI are costing them more than they perhaps thought initially?
To tell you the truth, I think I was very concerned 12 months ago, but the more I'm using AI to amplify our own product and the more I use AI for Schneider Electric, I truly believe that there are huge benefits for our own company. as a consumer, as a customer of AI, we can make your home 10% more efficient from an energy consumption thanks to AI. I can make Schneider Electric more efficient from a forecast planning standpoint, from a pricing standpoint with AI. So I strongly believe that there is a benefit for company. What it means, I'm going as a CEO to spend much more on token. I need to free up some cash in my company to spend on token. And of course, where will go this money? That will go to all those companies. So at one point of time, they will turn to a profitable business model. So I believe that the loop is closed, and I think it's a pretty healthy business for the coming years.
Olivier, I know you've got a hard out in about 15 seconds, but I'm going to make it a minute and 15 because 1:15 is it's more pliable. The rest of the business, we haven't talked anything about it. How's it going?
Look, Schneider is at the connection between the grid and AI. Power grid is a market which is moving very, very fast. As you know, semicon is needed in compute. So all the big sector of Schneider, which are data center, power grid, semicon, are growing fast. Industry has picked up compared to last year, which is also very encouraging. Every geography, is building its own resiliency. So overall, except building, which is a little bit behind, all the market where we are exposed are moving pretty fast.
Lovely to see you. We always learn something. Thank you very much indeed for your time as well. Olivier Blum, who's the CEO of Schneider Electric. And I just want to direct viewers to, dare I say, a project of mine, which is executive decisions. Olivier was very kind in Davos to sit for a good hour with me and as a guest. And you'll learn a lot about him and about the company and about what motivates him by listening to executive decisions. If you want to find that in all the usual places. Ben.
SpaceX shares popped 4% as the company overtook Amazon by market cap, becoming the 5th most valuable US company. SpaceX also briefly leapfrogged Microsoft, but ended up closing short.
Coming up on the show, the Fed is expected to hold rates at Kevin Warsh's first meeting as chairman, but something could be missing from today's decision. We'll explain what that is. Plus, the Anthropic saga continues, with US Commerce Secretary Howard Lutnick reportedly warning the AI firm of criminal and civil penalties. And we'll talk you through all things software and AI with the CEO of ServiceNow. That conversation right after the break.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
Business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that a society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Bring up to date with the markets, and it was a bit of a mixed picture on Wall Street at the close of the Tuesday session. You can see the Dow ending up about 0.2% higher, enough to post a fresh record intraday high and a record closing high for the day. The other two main benchmarks closing lower. Worth mentioning, SpaceX continued its ascent, the shares gaining more than 4% in Tuesday trading, on top of the 20% on Monday and the 20% almost on Friday. So up almost 50% since that record-breaking IPO, but still not enough to push the Nasdaq, to lift momentum and sentiment enough to push the Nasdaq higher. Let's have a look at what's happening on the Asian markets, and some positive export data out of Japan helping to lift the Nikkei. But look at that, flirting with the 70,000 level, which it touched briefly in the previous session, but just shy of that, although up 0.8%. The other markets performing as well. Kospi, South Korea, up 1.5%. Let's have a look at the anticipated open for European futures, and a negative start to the trading day being called. And briefly, let's have a look across the Atlantic to the US. And this is what's being anticipated. Gains across the board when Wall Street trading gets underway. According to ServiceNow, AI models and vibe coding are not replacing enterprise software, but increasing the need for trusted platforms. Bill McDermott is the CEO and chairman of ServiceNow and joins us live. Very good to have you with us, Bill. Just to explain that idea for us and where this leaves enterprise software of the sort that ServiceNow makes.
ServiceNow is actually the control tower for reinventing these businesses. So if you think about business processes, they're really hard to do, and we're the best in the world at it. We have 100 billion workflows across every industry in the global economy, doing trillions of transactions for our customers. So we're deeply embedded in the infrastructure of companies. And if you think about AI today, 9 in 10 enterprises are actually missing their AI cost forecast because they have no way of measuring how many of these tokens they're actually using. So when you think about rules, deterministic workflows, that's what we do. We provide the rules and rails of determining how to run your company in the most cost-effective and highly governed way. And if you want to highly personalize something, of course, you should and can use large language models to do that at 10 times greater cost. In fact, your past CEO was just a great customer of ours, by the way, was just talking about how he's trying to get his token cost under control. So with ServiceNow, that's all handled.
I suppose that is a pattern that we are starting to see, that in various companies, perhaps putting limits on employees using a certain value or number of tokens to use AI because of concerns about the costs involved, rather than just encouraging them to go crazy and do as much as they can with it. However, as our previous guest, Olivier Blum, was saying, they're starting to see that actually, even at a higher cost, those tokens might be worth the expense. And that would render existing enterprise software less attractive, wouldn't it?
What's happening is, and the reason why our market share is growing all over the world, the reason why we grow faster than any other enterprise software company ever, is because features and small tool sets will go away. But we've been consolidating them now for years. So you're going to have platforms that matter, that run enterprise business like ServiceNow, and there's a handful of others. And then you're going to have the language models and the hyperscaler clouds, and obviously lots of different data sources in all of these enterprises. What we provide is that clean pane of glass for the agentic front door to run your business. We manage all the identities of both the people, the robots, and of course the thinking machines. And we run your organization in a highly secure manner. And what's happening now, the third largest economy in the world is actually cybercrime behind the U.S. and China. So we're dealing with a world that has to be securely run. And right now, there's only 8% of companies that have actually deployed AI at scale in their enterprise. Yet they're spending $2.6 trillion on pilots. And these pilots are increasing the attack surface in every company. With ServiceNow, that's handled. We manage the attack surface. We run the business processes. We meter all of the language models and the tokens that you're using down to the individual and the team level. And we can actually turn down the usage of the tokens when you run past your budgets. And all of this is happening in a highly secure manner where you're running a company. And so there's a place for language models. There's obviously a place for hyperscalers, and there's a place for platforms that matter in the enterprise. And all the hoopla about software going away is really just features and tool sets that should have gone away anyway, because most of these companies are a mess. And we're consolidating hundreds of those features and tool sets onto ServiceNow, saving companies millions and millions. That's why nearly 80% of the FT 500 in Europe are running ServiceNow, and 90% of the Global 2000 are running ServiceNow. So we're really moving out, leading the AI revolution.
Bill, let me ask you a little bit more, though, about AI adoption, because there is so much news flow in recent times from that MIT report last year that about 95% of organizations saying they saw no return, to the likes of Anthropic having such powerful models that they can't even be released to the public, they have to be disabled. Where are we at when it comes to AI adoption? What do you think is the greatest roadblock from here?
Well, the most important thing is really to think about what you're hiring the technology to do. You're hiring the technology to do a job. And so when I sit down with the CEOs across Europe, which I've been doing now for 2 weeks, we had 100 of them, my CEO meeting in Paris, we're talking about order to cash, procure to pay, hire to retire, design to build, fundamentally rethinking how to run a company using the powers of AI, making people's lives easier, whether they're employees or customers or suppliers, making sure that the tech shortage that we're experiencing, particularly in Europe, is covered up with these agents. But we have to have rules and we have to have rails. We have to deploy them properly in concert with the EU standards and the regulations. We have to do this across every industry. So deploying AI properly to get a return on your invested capital is the absolute right thing to do. And to experiment with pilots that are completely out of control with spend that is not even harnessed in any way, shape, or form is what's happening right now. So the argument, I'm flipping it on the other side of the coin. The argument is not, is AI eating software? Actually, AI and software need to come together and fuse together to fundamentally run companies in a highly differentiated manner. And we see that with great companies like Ferrari. You know, Ferrari is basically resolving issues across all of their dealer networks and their F1 racers in real time on ServiceNow. Bookings.com. I can go on with the smart companies across Europe. Think of it this way, and this is the really big idea. What is it that your people do that AI cannot do? That's your human capital strategy. What is it that AI can do in terms of handling all the repetitive tasks that your people never wanted to do in the first place to drive enormous productivity for your company? That's the autonomous surface, and that's what you should be doing and using AI for. ServiceNow will enable that all across your corporation, and it integrates with all the language models, all the hyperscalers, and we're running sovereign clouds all across Europe. So we got you covered.
Right, Bill, it sounds very simple when you put it in that context, but we know that AI has unlocked more complex equations. For instance, where does Europe, its sovereignty, its growth story sit on the back of this? And as you mentioned, the more powerful models, it has also provoked a conversation where Europe is saying, look, do we need to have our own frontier models so there isn't a kill switch that sits in the United States? Where do you think this lands?
Well, I think it's very clear when I talk to the CEOs all across Europe that they want to have the sovereignty of their data and their clouds, because, as you said, if there is any kill switch required or any act was imposed upon them, they want to have complete control. And that is really what the EU wants as well. So we have made a decision as a company to give you the ServiceNow platform completely empowered by AI. It is an autonomous platform, 100%. And we give it to you your way. So if you want it in a sovereign cloud, you get it that way. If you want it in some hyperscaler environment, you get it that way. I think the main thing is companies that can shape AI in a manner that's cost effective, where it's delivering returns, compliant with the rules and regulations of the EU, and highly personalized to every industry and company in Europe, they're going to win. And we're going to win big. The companies that have great tech, but it's not harnessed or controlled in a way that delivers a return, I think people are waking up now and saying, that's not the way to go. It might be a way to complement what you're doing as long as you can harness it, but it is not the way to go.
Bill, they're going to let me squeeze one in at the end here. Lovely to see you, my friend. Look, your shares are down 33% in the year to date, under a lot of pressure for all the reasons that you and Karen and Ben have discussed as well. Microsoft is a company that valuation was just overtaken briefly, despite the fact it has $125 billion of net income. SpaceX loses money as well. Do you think somewhere the market's pricing the likes of you and Microsoft and others, dare I say it, different kind of criteria, or are they pricing it wrong compared with SpaceX?
No, I think, look, SpaceX is a very unique situation, and it's not surprising to me that there are many investors that are betting on a future in Mars and a moonshot and other exciting things that are going to happen. That's a very interesting endeavor, and I don't blame people for chasing dreams. Dreams are fine. At the other side of the coin, you take a great company like Microsoft, like ServiceNow. We are caught up from a valuation standpoint in what's known as this quote unquote SaaS apocalypse. But if you look at the fundamentals of the corporations, we're growing, accelerating revenue, expanding margins, improving profitability, have customers all over the world buying in on the platform, expanding our market share, and so do other companies. And so what I'm suggesting is that Warren Buffett probably had it right when he said, in the short run, markets are voting machines, and in the long run, they're weighing machines. So what's going to happen, Steve, is you're going to see lots of consolidation now. The little ones are going to disappear. The strong platforms are going to stay strong and get stronger. And then ultimately, the investors are going to say they made it through the AI challenge. They're actually a compounded grower because of AI, and they're reaccelerating because of AI. And then fundamentally, almost overnight, you're going to see these stocks double and triple. And so we're not worried. We're not scared. We're actually leaning in. We're growing. We're innovating. We're focusing on the customer, inspiring our culture, and we're executing like there's no tomorrow. Right. So I'm very confident in the position of ServiceNow and other companies. Let me also say this. There's other companies in enterprise software that are well-known platforms that will also do pretty good.
Bill.
I think we're unique in the sense that we cross the whole enterprise, but they'll also do pretty good. The big names aren't going away.